to it. But we just have to make sure that everybody knows how to use the platform and the changes to be expected. Although I'm sure some of you, if not all of you, have at least been on a show with Nate or Graham, possibly, and have seen their platform, or maybe you go to Stonkmania after this, something like that. So it's not. I think at this point it's been around long enough that people are aware of it and the changes. I know a lot of people that really like it. Like I'll have full-on conversations with people during shows in the private messages because I just don't want everybody to see what they're saying. So
I mean, it's kind of the way it is now.
it is. It's the way it is now. You're right. That is exactly right.
It's kind of funny. Like you're trying to sell it, but you're using a point that we do right now.
I gotta watch my mouth. We're on YouTube now.
Watch your mouth do what?
All right.
Got one of them Chipotle burritos you gonna stuff?
Man, I've had to switch. I put on a little too much baby weight, and I go with the bowl now. So it's a little
Burrito
better.
bowl.
Yeah. So that gift card you sent me will go to good use. So thank you for that. We got a nice morning though on the stock market. I tell you what, man, it's that pump yesterday was crazy.
I think it's just a reprieve from the chaos. We're just pausing today. Everybody's kind of digesting what happened the last couple of days. Big pops, big drops, and we're waiting for CPI tomorrow, and then PCE on Friday, and then FOMC next Wednesday. I mean, we're kind of stacked here, actually.
Yeah.
We can see some chaos. I don't think it's over yet.
No, it is definitely not. And if you guys listened to Jack and you shorted CL yesterday, like he said to do, you would be up handsomely today. So Jack said, it's over, baby. And CL's back to like $80 a barrel. So
it just wasn't a sustainable move. Like that. It didn't take a rocket surgery expert to figure that out.
That's right. Yeah. That's commodities though for you. You know, you get those big crazy rallies. We saw it in silver, we saw it in gold, we just saw it again in crude. So
yeah, I don't think the downside in gold and silver is done yet, personally.
I know there's a lot of people that are still super bullish on it, you know, and I'm just like, I mean, the crazy thing is silver's up another 7% today at $90 an ounce, which is baffling.
People are rotating back into gold and silver, and then they're gonna get ripped.
Yeah, no kidding. And when it comes, it's going to be violent, man.
It's going to be another big move down like we had initially off the top, more than likely. That's just how corrections finish. Like one big move down, kind of churn some people up a little bit, and then another big move down, and then the correction is done. That's just typical. So
that's exactly right.
I guess we should play the video, and then we'll get on to our normal scheduled content. So tomorrow we're moving platforms to this new webinar platform, and we're going to play a video for you about it right here. So if you come join us tomorrow, we'll be on the new platform. Same link should work. Unless you've got a Zoom link bookmarked, don't come to the Zoom. We won't be here.
We won't be here. That's right. Check the Telegram though, because they'll have the new link posted there. So here we go.
Hello, welcome to this introduction to our new webinar platform. All of our brands will be moving over the next couple of weeks out of Zoom and into WisePub, a new webinar platform for our free webinar sessions. This will allow us to provide better services and content and help you even more as we go forward and build out this platform. Quick orientation so that you know what to expect when you first get to a session using the new platform. When you arrive, you'll see something like this. Of course, the actual presentation will vary, but the layout should look something very similar to this. All you need to do is type in your name that you want to be known by in the chat and click join, and then you'll be in the webinar. Now, the area on the right, this column, is the chat area. You'll see that this is a group chat. Messages that come from any of the hosts will be highlighted in green and other messages will just be in gray. You can, of course, type messages, but keep in mind that this is an area that everybody will see what everybody else is typing. If a host has pinned a message to the top, like this one up here, it will stay there even as other messages scroll by so that you can continue to see that message. Note that at the top there are a couple of other icons. One that you'll want to pay attention to is this double speech bubble icon. This is a tab for private messages. You can hover over any of the host's messages in the group chat and click on the double speech bubble icon, and that will open a private message between you and that host. And of course, this is just here from earlier test conversations, but you can have a one-on-one conversation with any of the hosts by doing that, and you can go back and forth between the group chat and the private chat by using the icons at the top. You can also collapse the chat window if you want to and reopen it, and you can pop it out so that it will go into a separate window that you can then drag onto another screen if you're using multiple screens. Now, about the presentation area itself, in the bottom left corner, you'll see a speaker icon. This is your mute and unmute button. So if you can't hear the video, but you see it playing, you can double check and make sure that you haven't accidentally muted it. In the bottom right are a couple of other icons to control the size of the presentation. The double arrow icon will make it absolutely take up the whole screen, but this will of course hide the chat and other elements, so this is probably not what you want to do most of the time. There is a button to the left of that called Picture in a Picture. This will actually shrink it down into a little floating window so that you can do something else with the screen in the background without losing the presentation. This is particularly helpful if you're on a handheld device and you need to go to like your brokerage account or some other web page, but don't want to lose the presentation while you do it. And then you can bring it back to the main area. Now, what I would recommend is that everybody clicks on this little monitor button down here. This will make the presentation area take up the full screen, except that it won't hide the chat column and it will not hide the announcements, which is a section underneath the presentation. This is an area where we can post things as hosts that we want to kind of stick here and be here for the rest of the presentation, rather than put something in the chat that might scroll by as people put messages in there. So we can either, as hosts, we can either pin messages to the top for you, or we can put them in here as announcements. When we do drop a new announcement, you'll hear a little jingle to let you know to scroll down and look to see what the announcement is. And that is pretty much all you need to know. Quick review. In your presentation area, you've got your mute on the bottom left. You've got some screen controls on the bottom right, but the one I recommend the most is this little screen button here that lets it go full screen without actually hiding the chat and the announcements. And then in the announcements, if you want to send a private message to a host, just hover over one of their messages and click on the little double speech bubble icon, but then also keep an eye on the main chat. I think that just about covers it. Of course, if you have questions, feel free to ask them as you start using the new platform. We know that change is not always easy, but we are doing this so that we can continue to improve and increase the number of services that we offer you and the things we can do within each session. So we hope that you will give us some grace as we all adjust to the new platform. Thank you very much.
All right, we ain't letting Market Navigator. That guy always pops up on every one of my.
And the things we can do within.
So, all right, I'll stop sharing my screen. Let Jeffrey take over. But Dave just asked, is it going to be a new link? It's going to be the same link. We're going to get all that changed over today. The team's going to get all that swapped. But if you guys want a direct link to the channel, that is very easy for me to do. And that is this right here. So you can just bookmark this, and that is the room where everything will live. So other than that, I'll let you and Jack take it away.
Yeah, so now that we've discussed moving platforms, shouldn't be any problem for you if you use the link that we post out there every day, the Market Master link, prosperitypub.com/marketmasters. It should be redirected to take us to the room tomorrow. I mean, that's the whole point, the whole goal of putting out one link like this right here is that it should always take you to the place wherever we are. And then we also have I asked for the replays to be re-rigged. I don't know if that got done yet, but here's our replay page right here. And if you missed an episode, you can catch back up with us right there on that link. They're automatically posted now. You don't have to rely on Blake always being here to get it on YouTube for the replay, although he does try to get it going, but when he's not here, things don't always happen.
Yeah, that's definitely a factor, I will say.
We count on you, Blake.
I know.
Got to be here, man.
and I'm usually pretty solid, man. Like, you know me. Like, I always get the stream up and running on YouTube. And the show also won't be going away on YouTube. Like, I can still stream Market Masters to YouTube, which I know a lot of you like, so you can go back and quickly rewatch it before the replay gets posted. So
anyway, so without further ado, all trading involves a substantial risk of loss. We're going to talk some trades. You could lose money. In fact, if you trade naively, like a lot of people do, 90% of traders lose money is the statistic, I do believe. So be careful out there putting your money at risk in the market. Past performance is not necessarily indicative of future results. This presentation here today is intended to be informational, educational, fun, and entertaining. Hopefully you're entertained. We get the feedback that this is the most entertaining show that the whole company does. So hopefully we maintain that crown, Jack. And it's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Again, if you trade them, probably lose money, especially if you do it naively. If you want somebody to tell you what to do, there's people you can hire for that, but they're probably not going to take your financial interest at heart. I don't care what you say, oh, we're a fiduciary. We only make money when you make money. Yeah.
You know how bad that is? If you do the math on that, we only make money when you make money. That's when you don't want them to make money.
That's when you want the most amount of money.
Exactly. We only make money when you make money. What? That's the most like reverse scam I ever heard.
So the more you make, the more they make, and the bigger their cut, basically.
Yeah. Let's get that last sentence out of there.
I'm supposed to leave it on there, Jack, because we're not registered
forward.
financial advisors.
Yeah.
I mean,
We're
it's
not telling them what to do. If you desire, we're telling them what to do. We shouldn't be telling them what to do, even if they desire financial advice. We should just leave that out.
I mean, if you want somebody to tell you what to do, that's your bag, baby. There are people for that, but yeah, that's what we were poking fun at, Chris. Jack, man, you're gonna get called out already. Look at that. Whew. IWM ripping, baby. I told you it was going.
Yeah. Yeah.
Here we go.
I might have to get back into this thing. Yes. What's the news there? I'm doing some cash secured puts on CBOE today because it's down, and I also bought a little more to round out a position. But I see no legitimate news. That's a big drop for that company, other than maybe things are cooling off in the yeah.
Let me see.
Saw that too, lower volume and insider selling. I saw that as well, but I don't think that's all of it.
I'm trying to get today's triple income report up and shared to the public.
Can you pull up CBOE so we can look at that while you're waiting for the other thing?
Yeah, let me
Multitask professor.
there you go.
Yeah, that's kind of abnormal.
You know where it's going. Whoop.
Yeah. Right down the roadmap. All right. 260.
That'd be the place to buy. All right, everybody. here is today's report. For those of you loyal viewers that know what the report is, and if you're brand new here, we're going to go through it here in just a second. Uno momento, por favor.
When you get a stock like this down 4%, that's a good time for me to add to the position. Just say it in general. That catches my eye.
I am going to open the getting started with triple income. Alrighty. That's weird. It renamed it. All right. I think I got it saved. All right. Getting started with triple income. What do you say we talk about this, Jack? Get everybody up to speed.
That's a good idea.
So other places, this is Jack and I's take on the wheel strategy. A lot of people have a heartburn on this. It's probably the easiest, most reliable trade you could learn to do in the market. You can count on it. I mean, it's just like a wheel, it solves a lot of problems for humans. And if you just use it, it provides a baseline of consistent income in your account. Now, I'm not saying it solves all your financial problems. I didn't say that. I said it provides a baseline of consistent income. And it does it on 3 pillars with an asterisk for a 4th pillar of income. And we call it the triple income. It actually has 4 income pillars, but the 4th one is not always there. We'll discuss that as we go along. So this is a free resource right here. We're looking at building this into a PDF that we can hand out to everybody. And they may have typos in here. We're still working on it. And Jack, you still need to give me your feedback on it.
Yep.
So what this is, now the wheel strategy, the base of the triple income strategy, is a systematic income generating strategy that combines cash secured puts, covered calls, shares, and sometimes dividends into a repeatable cycle. And it's perfect for any stock investor looking to try to get into consistent income. And maybe I ought to say that to transition to options trading. It should be to transition to reliable
income trading,
reliable
cash flow trading, whatever. We're not directional trading. I wanted to talk about the difference here today also. I don't want to forget, but
go ahead and talk about it. Like now's as good as any. Might as well jump into it.
Somebody said yesterday in another chat I was in how much they love the wheel, the triple income strategy, but they just wanted stocks to pop. When they bought a stock, they wanted it to pop. If it didn't pop, or if they sold a put and it went down near their strike, they hated it. And I thought, maybe this isn't for everybody, because we don't need pops. We're not looking for pops. Pops are irrelevant. If the stock comes down to our strike on a cash secured put, that could be a good thing. So if you hate seeing stocks come down to your strike on a cash secured put, and you only want stocks that pop, this might not be for you. That's directional trading, and that's very difficult, trying to find stocks that are going to go up. This is so much easier, so much more profitable, and so much more confidence building. You're not going to go through the headaches of losing that you will on directional trading.
Yeah, so the goal right here, I mean, create and generate consistent income by selling options premiums.
Income should be bold and underlined.
Yeah, all right.
That's what we're going for. We're not going for the capital gain from a price appreciation. We're going to get that in the strategy that's baked into the strategy, is getting a price appreciation capital gain, but that's not the goal. That's a side benefit.
And we're going to generate consistent income. Like that's kind of goal number 1 right here.
Have the goal be as big as the word income. That way it just says the goal, income.
And stock ownership is that's where it kind of takes a turbocharge though. That's a secondary outcome, and it's really where the rest of you only have one leg of income until the stock ownership happens, and then you kick in two more legs of the triple income. And a lot of people don't realize that. They think about just selling cash secured puts. In fact, one of my VIP followers who, thinking about becoming a sidekick of mine, he really he loves the wheel. He's like, I've traded the wheel pretty much my entire adult life, but he will cut a cash secured put short instead of just getting assigned. And I'm like, what
I
are you
know.
doing? What are
That's
you doing?
exactly what this other guy was talking about because he didn't want the stock. And I thought you phrased it the best when you said getting assigned unlocks. You used the word unlocks even more revenue and profit potential. And that's really maybe one of the biggest secrets or myths that's bad is getting the stock is key to making the rest of the money.
So why it works? You get paid to wait to buy stocks you want to own at a price you want to own them. You get premium collection that reduces your cost basis. You compound your income through repeated cycles and three pillars of income, and you lower your risk than just buying a stock outright in the market today.
Yeah, that's so important, that last point there. If you did go out and buy a stock today, you could and should sell a call against it. That's a buy right or a covered call. And that has less risk than owning a stock. In a report the CBOE wrote to the SEC, they just straight up said the covered call is the least risky least risky strategy out there. And people think options are risky, but when you marry an option with the stock like that in a covered call, it turns out to be the least risky trade.
You
Food
know,
for thought.
so you know the wheel, you know, the wheel slash triple income, the wheel cycle is what this really is, and it's the kind of the heart of the triple income system or strategy. Now, before we get too deep into this, Jack and I, neither one sell this strategy. You can only get it by coming to the show right here or participating in my 50K challenge under my Term Trading Lab group. But um, for most people, they don't actually want to buy this. We've tried, Jack, you've tried to sell stuff on this. I've tried to sell stuff on this. Most people just the capital required and the income generated, it's just not those glorious 200, 300, 400% gainers. You're just not going to do that here. You're going to create reliable income, and we target a 40% ROI. That's annualized ROI. 40%. I mean, that beats every index I know of for the last 100 years, pretty much.
Yeah, and also, it beats a lot of strategies because when you take some losses, let's say you got a 70% win rate, the 30% is what beats you up. And that's what makes people quit. And one of the main things with this is don't quit. And one of the reasons you don't have to is you never have to really book a loss, right?
Yeah.
You have to on a directional trade, absolutely have to. If you short a stock or go long a stock, there's only so much loss you could take. And this, you don't have to book the loss. You could carry an unrealized loss for a long time as you're working at cash that cost basis down by selling more premium.
But you can turn, like, this is by doing this, you can turn a loser position into a winner, even if it goes against you. That's a huge benefit of this. Now, the whole thing starts out, you have to find a stock that you want to own. Number one, you have to want to own the stock. And it's back to what Jack was saying a minute ago. Like, the person didn't want to get assigned. Well, why not?
Scared the hell out of him. I don't know. I don't know. I kept, he was using the same things I was using. And I just, I just don't get it. There's just some people have a fear about getting assigned a put. And you either got to get rid of that and, which you should get rid of all fear. Fear does not apply to the stock market. Or try to wrap your mind around what is bugging you about that. You've already got the money in the trade. That's what I was trying to tell the guys. Like, why wouldn't you get the stock put to you? You already have the same cash secured amount of money in the account for this to happen, which then you got all kind of other cool stuff you could do.
Yeah.
And you'd be
So
lucky if you got it. He bought it back and he wouldn't have even got it put to him. That was the absolute worst part of the whole thing. He didn't save himself shit. He just made it all worse, And
yeah.
what are you going to do? You can lead I'm the guy that can lead a horse to water and make him drink, but that guy.
So what Jack's telling you, don't be an idiot. Yeah, these sessions are always recorded. Blake's got the replay link for you. And so any stock, there's stocks out there I would not touch with a 50-foot pole. I'm not going to do this strategy on them.
Me too. Tons of them. So it doesn't work on everything, really.
And there's some complete dumpster fire stuff. I'm never going to trade a biotech company with this strategy.
No pharmaceuticals, no biotechs.
Yeah, that's just me. I'm not into biotech. Now, I do have a little bit of pharma exposure right now, so I can't say never pharma, but biotech, I'm not gonna touch that. Generally, my rule of thumb for my personal trading is to stay the heck away from anything the FDA is involved in. That's Food and Drug Administration.
They can really screw you, and it's not worth the risk. But hey, look at Lori. She made 4,600 by lunch.
There you go.
Same strategy.
There you go.
Nice little way.
Now we're gonna use XYZ. We're not talking about Block, but that just does happen to be the same ticker as Block. So let's say we want to own XYZ. It could be ABC, it could be CWQ. I don't know. You fill in the stock. We want to own it, right? It's trading at 28. We don't want to buy it at 28. 28 is kind of high. We want to buy it cheaper. We'd be happy with 26, right? That's a good deal. 28 is a little high. So what do? You come in with that cash. You got $2,600. You want to buy 100 shares. You got to be able, this works in 100 share blocks. So $26 a share, you got to be able to buy 100 shares, and we sell a 26 strike put. Now, you notice my example here doesn't say go a month out, go a week out, go 3 months out. It doesn't, there's no time frame here, because for Jack and I, that's all flexible. That's all variable. Fluid. All right. It's all fluid. It doesn't say go find the delta that's X amount. That doesn't matter for Jack and I. We like trying to get around 40% annualized, which this one turns out it's 56% annualized in this example. We try to target a 40% annualized rate of return. And we can talk bigger about that here in a minute. Why 40%? But that's what we're targeting. All right. That's what it is. Now, how do you figure that out? We'll talk about it here in just a minute. So let's say we sell that 26. That's a great place to own it. We get $1.20. We get paid $1.20, which means we get paid $120, as Jack just said, cash money into our account.
Damn.
To agree to buy the stock at 26 at the expiration, at or before.
Boom. Funny thing too, I gotta say, that's guaranteed to hit your account. Did you know that?
Yeah.
It's guaranteed by the exchange to hit your account, folks. Just saying, you get paid up front and it's guaranteed.
No matter what happens with that put, you got paid $120. Period. End of story.
Over.
Now, you got to have $2,600 in the account to get that 100 shares. Actually, it's 2,600 minus the 120 premium you just got, because you can use the 120 to offset the cost of this right here.
Yes.
Now,
it's easier though when you go in to think of it as the price times 100 rather than.
It's just easier to the strike price times 100. That's,
you don't know what you're going to get, so just go with the 100% cash secured.
Now, annualized rate of return. This is how we kind of figure it out, Jack and I. You take that $120 that you got paid, divided by your $2,600 capital requirement. That gives you a 4.6% return. This options example was 1 month out, 30 days out. So we divide this rate of return by 30 days, and then we multiply it by 365 days in a year, because if we were able to jump out a whole year and just do this once, 40% is what we want to earn, right, Jack?
That's right.
So this example works out to 56% annualized return. Now, when you're sitting there looking at an option chain, you're like, holy crap, that's a lot of math to have to do for every strike and every example.
Which is another obstacle and why people don't do it. It's pain. Can be.
It can be a real pain, especially if you're not a mathy type person. Can you build a spreadsheet? Sure. Can you buy a platform that does it for you? Yes, indeed you do. And Jack and I have one that we use because it works freaking good. Anyway, there's ways around having to do this manually. But if you're new at this, maybe come hang out on the show. We'll show you some of the ones that work until you get some feet on you and learn how to do it. All right.
Now, sticking with the principles and concepts, there's two possible outcomes from our step number one.
Step number one was to sell this cash secured put, right? So we have a put. The strike is 26. Now, rock along. I guess one caveat we may should put in here that's not in here. When you sell that 26 put, what kind of what are you doing for the market, Jack?
Providing liquidity.
I mean, like, what obligation do you take on by doing that?
To buy the stock.
At any point in time, up until the expiration.
Until the contract's expired.
So you're making that obligation to the market that I will buy per contract 100 shares at 26.
Yep.
Anytime you want me to buy it, right up through expiration.
Anytime I'm willing to buy it, I'm getting paid for a promise. Write that down. Step number one, get paid for a promise.
So, option A, stock stays above 26.
I don't get it.
Then you don't get put the shares. The put expires worthless, or you can close it for 90% profit early. You can close the put at any point if you want to. I highly, highly, highly recommend you don't close it until you're in good profit.
Yeah. So if you sold it for $1.20 and it goes down to a nickel, you could buy it back and roll it out. But I would much rather have outcome B.
Outcome B, the stock drops down at or below 26, and the other party holding the long option, the long put against you, decides that you're going to buy 100 shares at 26. Now, as long as the stock didn't drop below 24.80, you're still in profit, right? It could have dropped to 25 and you're still in profit. Man, I don't know any other thing that works like this.
I don't either. And a lot of times it goes up after it goes down on Monday. It's $28.
Now, if you had done this, you no longer have a put, you no longer have any exposure to the market, your cash is freed up again, you can just go back to step one. That's a circle already. That's a wheel. But if you go on to outcome B, we move on to step two.
That's where the money resides.
And then, once we hit this outcome B, it unlocks two more pillars of the triple income. Triple income one, first pillar, selling cash secured put. When we get put that stock, this is where it unlocks more income opportunities.
Big money.
Now, step two, if we've been assigned, we've got the shares. Here's the continuation. We own the shares. Our cost basis is $24.80 because we got paid $1.20 per share to agree to buy the shares at 26. So actually our cost in it is $24.80. Now, we could just come in and sell a 26 call, right? That's right where we got put the shares. We can sell a 26 call. And right now, in this example, it's going for $1.10.
Wow. So now we're up to $2.30.
So now your cost basis drops to $23.70, and you're guaranteed this premium right here.
So we made $230 and we dropped our cost basis down below even further.
And Jack, when we sell that call, what obligation are we taking on?
We have the obligation to deliver the stock at the strike at any time from the time we sell it to expiration.
So if we were to sell a call below our cost basis, what's the risk there?
We get called out and lose money. That'd be not smart.
Right. So we potentially guarantee ourselves a loss.
Don't do that.
So this is one of those caveats, like, unless you get really good at this, don't, as a general rule of thumb, never sell below your cost basis. Right here. Now, as you get better at doing this, as you got experience, you can make judgments, you can be more flexible on this. But as a beginner at this, don't sell a call below your cost basis. Just don't. All right. You're guaranteeing yourself a loss and a bad experience in this triple income strategy.
You don't need to do that either. Just don't even think about it.
Now, we sell that. And this, right here, this is actually limiting us to only 2 legs of the triple income. If we had sold a 27 strike, then we had unlocked the 3rd leg. So leg number 1 of the triple income is making money, agreeing to buy the stock. Leg number 2 is agreeing to sell the stock. Leg number 3 is price appreciation on the shares. And it's not just from your cost basis. It's really, I think this is why PXO keeps track of where you got put. Because the triple income comes on a, if you bought at 26 and you sold at 26, you didn't make any money on the shares, but you did on the calls and the puts. Now, if you got in at 26 and you agreed to sell for 27, then you unlock the 3rd leg where you made money on the put, agreeing to buy the shares. You made money on the call, agreeing to sell the shares, and you made money on the difference in the strike prices that you got put and you got called. So you made money on shares.
Capital gain and 2 forms of regular income.
So right there, that is 3 legs of the triple income.
Now, if XYZ might be a dividend paying company, you got a dangling participle out there. That'd be the 4th piece.
Yeah. So number 4, and little number 4, if this is a dividend paying stock and you were holding through a dividend paying period, you can collect a dividend and it's a bonus little chunk of cash.
All right. Now we did sell it. Now there's 2 possible outcomes here now that we sold the 26 call.
Now, option number 1 or outcome number A, stock stays below 26. Guess what? Call expires worthless, or we close it for 90% profit. Maybe we close it for a nickel, sell a new call. We keep the premium, still own the shares. We can repeat step 2. Easy peasy lemon squeezy right there.
All day long.
That's an income generating machine right there. Your stock is a capital asset, and you can keep doing covered calls. And as the CBOE said, and as this little book right here says, doing covered calls is the safest strategy in the whole market. Safest strategy in the whole market. So that's, you're at home right there. Now, outcome B. The stock goes ripping. Goes to 50. Oh my gosh, Jack, we messed up. We missed out.
It's up so bad.
We get called out at 26. Stock's at 50. We missed out on all this upside opportunity. We did it wrong. It was horrible. But actually, we get total profit of 230. I need to fix this. And we did that in 60 days, which is actually going to turn out to be a little bit better than 50%. I'll do the math on this here in a second. We got to fix this number right here. Let's just go ahead and bring the calculator over, figure it out. So we got $230 using $2,600 in capital. That is 8.8%. 8.8% in 60 days. So 8.8% divided by 60 days. That's how long we were in it. It was 14% divided by 60 times 365. That's actually 89.2% annualized.
Way over our 40.
And we're still way beyond our 40.
Even if
89.2.
we bungled this thing up and left a ton of money on the table, we still made great money.
Still way beat our goal of 40%.
Now, if that did go to 50, and I saw the question, would it be worth rolling it out to get the bigger money? No, you would pay a fortune to buy back that 26 strike call. You'd take the biggest loss you ever took in your life. If you sold that 26 call for $1.10 and it went to 50, it would be worth $24. You'd take, I don't even know what that is, a 24,000% loss to then resell it at a higher price. No, you just take the call out at 50. I mean, at 26, even if it's at 50, and you just walk away and do another trade. You can cry about it. I give you a little bit of permission, but normally there's no crying in the stock market.
Jack, Jack, hey, I used that example about it going to 50 because it happens to Jack and he gets a little upset about it. Like
I
he
do. I do. I'll admit it. ASTS, I sold the 91 calls. Just think about that. And it goes to 105. Yeah, man, that's no fun. That does not make Jack a happy trader. Then it goes all the way back down to 89. So then I was like, damn, I wish I got called out at 91. You're never.
can't win all the time.
Yeah, I'm never happy. So I just admit it. You can cry a little bit, but don't let anybody see you. And just you're still in the trade.
Yeah. And
Well,
so
that's the thing. It's happened to me with Vert badly. I got stuck on a call out way out of the money. And it happened to me on ASTS a little bit at different things, but it's part of the game. You got to control your mind.
I'm way behind in the chat. So there's my uh, PXO link if you're interested. Jack and I use this software called PXO that simplifies a lot of the math behind the wheel. We don't, I get a little cheese if you use my link. I get a little cut of it, but this is not our software. It's not our monkeys, not our circus, not our show. And we'll explain some more here in a second. This is a longer conversation than we may have time for today to cover the entirety of the triple income. We're giving you the basics today, how to get started.
Principles and
And
concepts.
Jack's sitting here talking about like VRT.
I love this thing like a fat kid loves cake. I just love it.
Look at it go up and to the right.
Well,
You
I'll
know,
tell you what happened. It got added to the S&P 500. It
yeah.
was on the short list of being an addition, and I thought with its recent performance, yeah, because the S&P 500 is the most rigged game in the stock market. Oh, what the S&P 500 does, it's not the same S&P 500 ever. It's not the same S&P 500 it was a year ago. So what they do to manipulate the S&P 500 is they kick out any of the loser stocks and they replace those with winner stocks. And it's a double whammy because all the hedge funds and institutions that try to mirror the S&P 500, they have to sell the stocks that get kicked out and they have to buy the stocks that get added. So it's as close to a guaranteed up trade as you're ever going to see in your life when a stock gets added to the S&P 500. But now, Chris, I cannot wait for a pullback anymore in Vert. I could prior to them getting added to the S&P 500, but this is a significant milestone for the company and it legitimizes the company. And now it opens it up to a lot more investors and hedge funds and pensions and teachers unions and everybody. Now it legitimized it, adding it to the S&P. So I don't see it pulling back. If it does, that'd be amazing, but I just don't see it. So I'm just going with it as it is.
Now we were talking ASTS a second ago,
Love this
and
one too, man. Can't get enough of this. Price action here is as good as it gets, people.
now right now, as of today, why Jack and I love this software. This is PXO. Drop the link in the chat already. This is done by other people. It's Power X Optimizer. It has a bunch of tools and crap in here. I have everything turned off except the wheel. The wheel's the only thing I use in here. Everything else is black box and I don't care. But what this does, it has very powerful tools in here. Pulls live option data. You set your expiration. How do I know which expiration? Generally, you look around. Like it doesn't have to be this Friday. I usually start this Friday looking for the best premium because that's a short time frame to be exposed. You can go pick all these other ones. Doesn't matter. typically I find some of the best results just going after the closest expiration until I'm like 1 day out. And then it typically looks better if I go a week out. Now there's always caveats. And what about ones that have 3 time a week op, blah, blah, blah. There's lots of caveats. These are just kind of the generalization. I go a few days out or a week out. This software makes it super handy dandy easy. Roll in here. ROI is account. I don't even look at these other things until I look down here at the ROI.
Me too.
And here it is right here, 75.
Just so you know, the old way of doing it for me would have been to take every strike and do the math you just did when you broke out the calculator, and then out of 10 of those, find the one that yields 40. That's a pain in the ass. That no one's going to do that every day, not even me. I flunked out of ninth grade math. I hate doing all that math. So this is why I say to me, this tool is priceless because I don't have to do any math. All I got to do is look. It's a don't make me think type thing. See that ROI? Find the one that's closest to 40, sell that one.
Yeah, right there. And you just click on it. And if another advantage here, if you have your account size, your buying power put in here, and you have the number of positions that you desire to manage put in here, and you have them set, it tells you how many contracts to sell. Right there with that 2 sitting there. It tells me to sell 2.
Everything. Price, strike, expiration, everything.
So it's got the expiration, the strike price, the price to go for in your platform. Of course, you can be a little more aggressive. I usually am. And then how many contracts to do. All included right there for you. I didn't have to think. I didn't have to pull out the calculator. That's why I like this software. And then you can put it in your trading log.
Now, we had the question, why 40%? We
Yeah.
can't leave that out of the discussion. That was a great question.
Yeah, so why 40%, right? That's so how much does the market make every year, Jack, in general?
I don't know, 6, 7%.
6, 7. Sometimes some people quote up to 10%, if you're chasing NASDAQ or something like that. So how do you beat the S&P? How do you beat the NASDAQ? You go after a higher rate of return, right? Now, if you go after 100% ROI, how likely are you to take big losses?
You're going to get killed. That's not realistic. First of all, you got to pick a goal that's realistic.
So, what's realistic? 100% realistic? Probably not.
Your luck. You did it.
There's a lot of luck to it. There's some option traders out there that get lucky a lot. A lot.
No question about it. But to do that, they're also taking a lot of risk. You got to remember that. They're taking a ton of risk. They're probably doing directional trades and buying options. Those are the 2 worst probabilities out there.
I've seen dudes make $1 million and then turn right around and lose it in one bad trade. And take 6 months, take a year and a half to make $1 million, and then turn around in one bad trade, lose it all. I've seen that happen. I've seen it happen at least 4 times in real life. Somebody trading with me. It happens. I hate to watch it, but I've seen it happen more than once where a person lost at least $1 million, and that's tough. But they were going for those big gains and more than 100% ROI. Now, Jack and I like to target 40. It's pretty reliable. In fact, PXO, I didn't tell PXO to color the numbers the way they color them. They color that 40 right at the start of the orange. It's right at the top of the green because it's a relatively safe place to target. It's reliable. You can do it over and over. That's why it's colored the way it's colored. Right anywhere with the green into the orange. That's right at the top of the range. It's repeatable. You can do it. Usually you're pretty far away from the money. Like if you do this 75, you're way down here. ASTS is trading at 90. 75, holy man, you're way below the money.
And getting assigned isn't always part of the game. Jeffrey, you've done TSLL, I don't know how many times, 8, never got assigned. I mean,
I did like 64 trades on one of my accounts and never got assigned.
So it can happen that way too. Now, you wasn't trying to not get assigned. I saw the question, is there any way to guarantee, how do you do the wheel to not get assigned? Well, you would just have to buy back the put and take the loss.
Technically, you're not doing the wheel if you don't get assigned.
Yeah, yeah. You wouldn't want to buy back the put and take a loss. Just take the assignment and start selling calls.
Yeah,
No, no goal.
technically, you're doing a different thing. Because wheel trading involves getting put the shares.
Now the 40% also plays a bigger role in the ultimate goal.
Now, the ultimate goal for me, this goes beyond just this income strategy. I have an account right here, and I started this account tax day, or I refunded this account with some borrowed money, funded the account back here tax day last year, 2025. You can see right there. All of a sudden on the 17th, I started making some money. How often do I trade? Every day. Trying to bring in some money every day on this account. Now, my goal is to build this into an account that generates $50,000 a month of profits and income. Right now, look at that, Jack. I jumped it up.
Liking it.
Jumped it up, made a jump right there.
Now with compounding, folks, he's pouring the profits back into the trade. You have the possibility to take that from 15,500 a month to 50,000 a month.
50 is greater than 15.5. Right? So I am still not at the challenge yet. This is ongoing. This is my personal thing. This is not like a stunt for social media or anything like that. This is my personal freedom. Rewind. When I worked a $40,000 a year job before I became a guru, I didn't have excess money. I had 3 kids, a wife, house, car payments, other things we spent money on. There was hardly no extra cash. What extra cash we had to, all went to retirement accounts to save for, the future. All my trading accounts were retirement accounts, basically. And as I became a guru and I made a little bit more money doing this thing I do, entertaining people and providing financial information, I pumped all that money I was making into retirement accounts still. That was the way I was trained. That's what I thought was the right way to do it. And I didn't have any taxable accounts of any size. And guess what? The guru game is a game of ups and downs. Sometimes you come out with a new product, you make some money, and then you go through a lull. And some of these lulls are pretty brutal, I found out. And it can be a tough thing. So the guy that got me into all this, Rob Booker, he was like, "Hey man, I know you can make money trading. Why aren't you making a stable base income trading?" And I said, "Well, because I was always told that you should, not pay tax on your trading money and, put it all in IRAs." And, he goes, "Well, how is that working to pay your bills?" I was like, "Well, it's not, because I'm not old enough to draw on it and pay any bills." And he's like, "So how's that helping you?" I was like, "It's not really. I mean, maybe it helps me down the road, but I'm not retiring. I've got like a good, 20, 30 plus years till that happens." And he goes, "So why aren't you fixing your problem now by trading in a taxable account?" And it was like, light bulb moment. I never thought of that. I'd never thought of that. I was so focused on not paying taxes. I never thought to just make a base income by trading. All my trading income was in IRAs. So I funded, at the time I had to borrow some money to fund this account. I didn't have any extra money again. And so I got started. That was about almost, it was 11 months ago coming up here. And right now, pretty proud to say, I started with about 75,000 I borrowed. I've made $80,000 in profits. Right there.
That's
just
awesome.
going after 40% ROI.
That's awesome.
Now, I'm doing better than 40% ROI because I'm compounding it basically weekly. And that's where the real power of this comes from. It's not just 40% ROI. When you go after those short time frame trades, you're compounding it sometimes multiple times a week. And this gets a lot bigger.
Compounding on steroids.
Gets a lot bigger, as you can see right here. And you're wondering, hey, how do I follow this? It's posted right here in public. I can throw the link in the chat. And I don't like to take losses, so I'm very conservative in this account. Very conservative. Like, look at this.
That's
Where's the
one
big?
thing in common. I hate taking losses. And that's what I love about this strategy. It's the only one I know that you do not have to book a loss.
Where's the big losses in here? They're
They
not
don't
there.
stuff.
There are losses. There are drawdowns. Occasionally I roll a contract for a loss. Like we were talking about, this one was Rocket Lab back here last summer. It went a little bit in the money. I went ahead and bought that call back and sold a new higher strike call. I could get more money on the shares than it was going to cost me to buy the callback. This one right here, tried some new trade that was stupid. Not going to do that again. Stupid for me. And what, the people I was watching do it, not necessarily stupid, but for me and the way I trade, that wasn't the way I needed to trade. So, touched the hot stove, moved on. I'll probably do it again sometime in the future. I'll probably take another one. It's just, we traders like to do that, Jack, don't we? I mean, like,
stay away from it.
So anyway, those are all in here, but they're very, very minor and relatively benign compared to the upside here. That 4K loss is right there. That little bitty blip made it back and it kept going.
It's the smoothest growth curve on a portfolio I've ever seen, because it doesn't have those jagged spikes up and down like a buy and hold portfolio would.
Yeah,
strategy.
Most people you see they're go like this, right? You got big swings up and come back to zero several times.
Yeah, that's why this is not based on directional trading. And it also proves, I've said this for years, strategy selection is more important than stock selection. And here you've selected a strategy that's going to outperform everything.
I sell income trades. That's what I do. It has to do with my beer money trade. I talk about it on YouTube. I've talked about it here on the show. I do the wheel in here also. Those trades are down in here a little bit because I don't necessarily rotate that money every day. And right now I'm jammed up in a couple positions. Have to roll down. I do those beer money trades every day. But here you go. Circa, Hims, Chewy, DJT. Those are a few of the names that are in here. There's more stuff in here on down. Docu, Chipotle, HPQ. So I've got stuff in here. I am wheeling it and dealing it, compounding it. And there you go. That's, just trying to book some profit every day. The last month, not a single day I didn't book profit that the market was open.
Me too. I haven't had a day this year, knock on wood.
So that's the goal here. Now, circling back to the 50K. Why 50K? Where does that all come from? 50K, I look at it as financial freedom.
Monthly.
That's 50K monthly per month. 50K a month, financial freedom. That's like roughly 600K a year.
Solves a lot of problems for you and other people.
I can do good for other people. I can help other people. I can, I don't have to worry about anything. It's reliable. I can count on it. That's why I want 50K a month. Now, that works out to when my account gets to 1.6 million with a 40% ROI, that generates 50K a month. 1.6, that's not hard to hit. That's not that big. That's not that big of an account.
Everybody's going to watch it happen in real time.
And everybody's going to see it happen because, this has gone from 0 11 months ago to 15.5K. With any luck, maybe by November, I get to this. November at the earliest, maybe April next year.
Either way,
I slow down.
I'm excited.
Somewhere in this neighborhood. Yeah, I thought it was going to take me 5 years when I started. I was like, 5 years. Yeah, that's a good goal, right? But we humans tend to overestimate what we can do in a year, and we tend to underestimate what we can get done in 5 years. And it looks like by the time I'm 2 years in, I might hit this goal.
Then the book comes out, right?
And then we'll see what happens.
Professor's Guide to the Triple Income System.
It unlocks a whole lot of things I could do if I'm got a 50K reliable income in the background. So
It's cool. You know, giving it away too, you can help kids with tuition, you can help people. Medical bills can be a real backbreaker. You can do so much good, and it's
yeah,
fun to do that.
and yeah, it's just one of those things. Like it to me, just unlocks helping people.
Yeah.
I love to help people. I'm not beholden to having to do any certain thing for money if I have a reliable 50K in the
That's
background.
it's the freedom. If you have the skill, this is the most priceless skill on the planet is knowing how to make cash flow from the stock market. And you can get started for less than 5 grand, 2 grand. This is available for everybody.
Now I did some numbers for my kids, just showing them if they only got 40% ROI, they weren't able to compound or anything like that. Which if maybe they have. I know my one daughter, she works, she can't really do this weekly necessarily, but if she just did it monthly and was able to get 40% ROI, you can get to $1 million starting out with 1K, doing this for 15 years, get you to $1 million or more
Nice.
at 40% ROI.
There you have it. Your guide to $1 million using options.
Right there. Does it take patience? Yes. Does it take discipline? Yes.
Show up every day and grind.
Right there. So you can go from 1K to $1 million in about 15 years with a 40% ROI, even if you're not aggressive.
That's not compounding. If you compounded, it'd be happening a lot faster, right?
Yeah, that's if you could compound it weekly or bi-monthly, it gets there faster. It's craziest freaking compound interest. That's the eighth wonder of the world, right there. So, how come I win percent? Because these spreads count as losses right here. So when I do these right here
One side of the trade shows a loss.
and right here, that's only a 50% win rate. So even though I'm making money on these every day, they only count as a 50% win rate because one side takes a loss and one side takes a win.
One side takes 100% loss.
Yep, 100% loss and a small win right there.
So that's not an accurate picture, but the growth curve is where it is.
If it actually grouped this together in that is the trade,
That would not show a loss at all. That'd be a
yeah,
win.
I'd have almost no losers in here at all.
Except 100% of your net credit. That's how that is.
Now, you might not think that these NASDAQ trades add up to much money. I call them beer money trades. They're small money, just collecting a few bucks on a contract every day. But if I click on the reports, break down to symbols, you can see NASDAQ represents $37,000 of the money I've made. A big Rocket Lab trade, almost, 12, a little over $12,000.
Very nice.
So I make the big chunk of money on NASDAQ trades.
And I think you make a good chunk of money on this little thing we're going to show them next.
Yeah. Well, I do that in a different account too. So we're going to show you if Blake's got a replay of something we reintroduced this weekend.
This thing still blows my mind, folks. If you haven't got on board with it, please do. You'll be glad you did. It is the coolest thing. And if you love automation, you're going to love this.
Could not agree more.
It's just this pattern that I use to find everything.
But now it's the professor in a box.
Yeah, kind of is.
Doc in a box.
Especially now that it picks out options for you, and that's
Yes,
the big
and spreads. We can't tell them too much, but it is the doc in a box.
I love it. All right. Well, if you guys are ready, I'll fire it up.
Remember, tomorrow we're on the new platform, everybody.
That's exactly right. And we appreciate you bearing with us, and I'll be there. So the show will go on, I promise.
All right.
All right. Here we go, folks. Thanks, Jeffrey.
But get this, 2,434 trade signals with an average hold time of 3 days on the